Hello, and welcome to a new episode from the Markets Middleman. Today is Sunday, December 14th, and I'm about to share with you my Forex forecast, especially on DXY, EU, and GU for the week ahead. Now, before I move into my plan into the next week, I just want to make a quick recap on our last update and what actually happened in last week. So if you haven't watched the video before this one, please watch this one, watch it, and then get back to this one because they are so related to each other. So quick recap. I actually mentioned the importance first of this bullish fair value gap and how the previous week just closed below it. Okay, confirming that we are bearish, closing below the low of previous candle, which hadn't been the case since a long time. And of course, the importance of this weekly breaker block over here. So this was the last up closing candle before the market shifted in direction. So before I move into the lower time frame and show you exactly what happened, notice how the weekly high just tipped into this area. So there was really like a high selling pressure around this area, and prior to the interest rate, market started its push to the downside and then made a continuation after the news. So it was a really nice breakout on the weekly time frame. And this week is not so different. So we're still closing bearish below the low of this week. And there's a lot of point of interest that are laying somewhere around this area, which you will see on the daily and the hourly time frame. Now, on the weekly basis, this is the third consecutive bearish close. Okay, so the low of this week has a high probability to be taken. Okay, especially if the high wasn't taken. If during the week anywhere you see price rotating at midpoint of this weekly candle, there's a high chance of the low of this week to be taken, plus the gap that exists on the daily time frame, plus two minor sell sides, plus the major sell side, the low of 2025. So there's really a lot of stuff going on. I will go into the daily time frame, and I want to show you also what price respected during the high of Tuesday. So market open on Monday, made some consolidation, swept the high of Friday, and then Tuesday came to sweep the high of Monday, cover the gap, okay, from last Wednesday, December 3, and then market rallied to the downside. So this gap on the daily was nested around the weekly breaker block and the weekly bullish inverse fair value gap. So this was like a really important point for price to rotate and push lower. Now, moving forward and my plan into the next week. I'm obviously still so bearish on the DXY, but here I have two options. Okay, first option for continuation lower. I think the low of Friday will actually be taken soon enough. We'll take the sell side and we'll fill this gap. So I think this is going to be the objective going into the next week. But I just want price to retrace a little bit higher so that I can position myself in a good area so that I can have the best risk to reward, okay, almost above 3 risk to reward, and best entry point. So for this fact, of course, on the daily, this is obvious, a bearish daily fair value gap aligning with those sell side liquidities over here. So yes, this is the most important area of interest from the XY. However, okay, it's not guaranteed that price is gonna rotate back up simply because of the close of Thursday. So this day closed well below the low of Wednesday. So the low of this day must be taken before the high. So this tells me that there's higher chance for price to go lower, sweep the sell side, fill out this open gap range, and then maybe at this time during the year, okay, we're closing the year, maybe we will see some accumulation or consolidation going into the end of the year. Christmas is coming, the New Year's, maybe there's will be a little bit less volume. Then this fair value gap could actually be balanced early 2026. Now, I don't want to forecast for a long time. Market can sweep this daily bearish fair value gap on Monday, Tuesday, and then rally down. But I'm saying that I'm not gonna be waiting only this daily fair value gap to be balanced so that I can position myself shorts. There's something else going on the hourly time frame, especially on the 8 hour, that could actually take Friday's high, tap into this gap open over here, and then rotate lower. So what happens after here, I really don't know. Maybe price will still sweep this sell side over here and then rotate higher. So this fair value gap could be just left behind, just like as this one. It was filled later on, and this one was never really filled actually. So it's just a matter of time. So I don't want to confuse myself which area of interest I'm going to use. I'm just going to react to price and let price action tell me what I need to do. Now, the other area that I want to keep a close eye on is this 8-hour order block. Now, I usually like to use order blocks when they are the only order block, the up closing candle within a leg, within a displacement lower. So we see how price is continuously making lower lows, lower highs. So this was the last bearish displacement lower. However, price can either manipulate, test the maximum, the mid-range of this 8-hour order block. So in other case, I mean that this is an independent displacement lower, and price just wants to retrace back within this range over here. In other words, testing this 8-hour OB 705 fib level from this wave and then continue its push to the downside. Now, if I see that price is approaching this level and not respecting it much, no signs of bearishness, then yes, I'm gonna put my eyes on the daily fair value gap and then position myself short into the sell side. But before I see a solid confirmation that price don't want to respect this 8-hour, I really don't have any reason to wait longer um, on price because simply of this huge and very extreme bearish momentum. So this is the areas of interest on the DXY, keeping a close eye on the 8-hour OB, taking conservative entry, but aggressively approaching short positions in case I saw price on this daily fair value gap. Alternatively speaking, of course, if we see something like this and price is not retracing back, then we can adjust our plan. But I think the probability of sweeping this sell side is much more higher than being bullish on the DXY, at least closing this gap range open. So that's it for the DXY, and I'm gonna jump quickly into the EU and GU and show you my plan moving forward. So here's the thing, before I move forward into my plan for EU for the next week, I want you to notice the importance of this 12-hour order block and how market swept this or dipped into this 12-hour order block on Monday, and then Tuesday came to sweep the low of Monday and induce this 12-hour order block, which was the last point of defense for buyers, aligning with the weekly breaker, OB12 and the 705 fib level from this last push higher. So we had a displacement, area of interest, and then we had this buy side not taken yet, as well as this buy side over here. So of course, obviously we saw how aggressive this price action went up from this 12-hour order block. So moving forward for next week, I want to see something from the EU. It's obvious how the high of Wednesday and the low of Friday created this daily bullish fair value gap. Notice how Friday did not close above the high of Thursday, which means this low can actually be taken. So the areas of interest for the EU going into the next week is a dip lower into the daily fair value gap. Now, at the upper boundary of the daily fair value gap, it's a little bit high point. Okay, of course, price can reach here and just move higher. But just for me to sharpen or align this area over here with something else, I'm using the 8-hour time frame. And of course, since EU and the DXY are highly correlated with each other, okay, we see the same 8-hour order block that we are waiting for DXY, we see it the same occurring on the EU. So this is the last 8-hour order block, or sorry, the only 8-hour order block in this massive move to the upside. So usually I take the body of the order block, but in case it was a doji, okay, or a pin bar, then I would like to take the whole range. So this also aligns with an order block on the 4-hour time frame. So I have price displacing higher, not really afraid of this buy side, just sweeping those two relative equal highs, but there's still October 1 high not taken yet. So there's still potential room for the upside, and there's still high momentum for the upside. It's just maybe it's a matter of sometimes seeing some accumulation, manipulation to the downside, and then continuation to the upside. So I'm gonna keep a close eye on this 8-hour order block over here. Of course, if price wanted to continue its push to the upside, I think I need more price action. Okay, so in case market opened, price just kept on rallying to the upside, I would need more price action in order for me to be able to push up with buyers, because simply we are just extending this move to the upside and I don't want to end up buying at a buy side. Okay, I prefer to wait for a retracement and then actually join buyers. So the best case scenario is to see price rotating back down from this level and then continue taking this buy side and those three relative equal highs above. So this is my plan for the EU, really plain and simple. We still have the direction. There's still very nice momentum in the markets, and I would like to position myself to the upside. Now, last but not least is the pound, the GU or the GBP. The GU already made its first initial push to the upside just before the EU in a little bit of time. And usually those two assets move together. So my plan for the GU is very actually similar to the EU. Notice how this last wave displaced this breaker over here. So we're still having higher high. Okay, now I want to anticipate where the next higher low could potentially materialize. And this is why I go through the time frames and I break them down until I find something optimal so that I place my order in the best way possible and I capture the best risk to reward possible. So we see that price didn't even swept this minor buy side, and we have a major buy side which was October 17th high. Okay, not taken yet. So did we reach a major area? Not yet. Do we still have a potential for the upside? Yes. Okay, now my job is to work on time frame alignment and choose the best entry possible. Now previously within this week I was interested in this 12-hour fair value gap aligning with this breaker over here. Okay, and the daily breaker block. I'm gonna show you the daily time frame really quick. Okay, so we have this daily breaker inside a 12-hour fair value gap. Okay, which was not a bad area of interest. However, how price action closed on Friday, and after I clarified my levels and comparing this with the possibility of DXY sweeping a little bit higher and then continuing down, and the possibility of EU sweeping the 8-hour order block and then go higher, then this will affect GU in this case. So GU might show us something like this. Early within the week, price might push higher, okay, fill out. Let me show you this a little bit closer. So price can go a little bit higher, okay, balance the 4-hour fair value gap that was created during Friday, and then manipulate one more leg down, tapping into this area. And I'm gonna speak about this area and the importance of it. So first, from the daily time frame, it's a potential order block. Okay, so it's the last down closing candle before the displacement to the upside. On the 8-hour time frame, which is the most clear time frame for GU in this setup over here, we see that this is first the 50% mid-range of this consolidation over here. So this is a very fair price. Usually price return to the mean range of it and then continue the potential displacement higher. Now notice also during Monday and Tuesday the consolidation that happened over here. So this was the last breaker block on the 8-hour time frame before price displaced higher just after the news. And if I take a Fibo level from this low to this high, this is the 705. So usually this is the best pocket for buyers slash sellers, depends on the wave. So this is actually a very interesting level over here. Okay, and notice how price closed this bearish candle. Okay, I like the fact that bulls hold into the end of the trading session and could actually close somehow bullish. But I mean, if price is gonna go from here, I wanna see an 8-hour close above this breaker over here and then retrace back and continue sweeping this buy side and this buy side. So in case price wants to go up from here, there's another alternative plan that you can join buyers from it. However, notice this order block aligning within fair value gap. So price might still manipulate higher, trap early buyers, and then sweep everyone that bought from Friday. So we take Friday's low, we tap into the last point of defense for buyers, and then we see price rotating or continuing actually the overall move. So I really like GU the most actually because it's clear, it's obvious, and it's simple at the same time. So I would actually approach price if we see it going up from here, or if we see it sweep down and then go higher. I actually prefer, of course, the next scenario, which gives us the best hour multiples and the best position ahead. So that's it really for those three major assets. If you really like this update, go on your charts, put down these levels, place some alerts, and really observe price how it actually react on those levels. Also, one last thing I want to mention is how many news we have for next week. So we have a lot of news. Unemployment for GBP, we have a lot of news on the US retail sales. We also have the inflation and, of course, the interest rate for the GU, and also on retail sales. So this week is really big in news. So I expect either a continuation to the upside. This market are crazy, especially this month. So yes, I wouldn't be surprised if we see like another push higher from GU and just continuing the push to the upside, or maybe just finishing the last push higher and then maybe some further manipulation. So really being prepared in those markets is rule number one. Okay, so we outline the possibility of scenarios, we prepare our levels, and it's just our job becomes much more easier and simpler if we are really prepared for the week. And of course, those markets are dynamic, anything can change, anything can happen at any time. So this is why we control our risk, or we manage our risk in a logical way, and we don't expose ourselves into a lot of trades and a lot of assets at the same time. So this is my plan. If you enjoy this video, share it with a friend, leave us a comment, tell me what is your opinion, what could be your potential plan, and yeah, I hope you find it helpful, and I see you in the next update. Thank you so much.